And my next guest says those real estate headwinds could spill over into other sectors. Joining us now is Stephens analyst Matt Breese. Matt, it's good to see you. And where are you digging into?
Yeah, thank you, Kelly, very much for having us. Yeah, so our coverage list is the Northeast and Mid-Atlantic banks, many of which play in the metro New York City area, many of which not only deal with rent-regulated multifamily, a lot of those buildings also have market rate multifamily. And I think those are kind of your first order of impacts. Bear in mind that he has yet to win the general election, but if that happens, I think you could see the first order impacts come June and October 2026 when the Rent Guidelines Board sets allowable rent increases. Beyond that, however, I think there will be an increasing stigma attached to real estate investing in New York City. Remember, the rent-regulated buildings or apartments share a lot of the same space with market rate apartments, and so if you're a landlord and you're trying to pencil out how to meet and exceed your expense base, when you institute a rent freeze, I think what you're going to see is you try to make it up on the other side and increase rents on market rate apartments. But overall, your bottom line is impacted, and you may see folks start to forego maintenance related items and investment related items, and the overall quality of buildings decreases.
And
in
Matt,
real estate,
I was going to
yes.
say it's interesting because a lot of people yesterday had this knee-jerk reaction where they sold off some of those New York City REITs as a result. Like you said, you're kind of looking at the banks here, which would be left, so to speak, holding the bag. Is that right?
To some extent. Now, you have to remember, a lot of the commercial real estate and multifamily, the sector came under extreme scrutiny last year when Flagstar, underwent new management and raised capital. And so it's not a unassessed asset class. A lot of the banks have really looked at it more closely, built reserves. There's been plenty of time to prepare. But I think the rent freeze would, layer on an additional stigma towards real estate investing in New York City. And there's two things that happen. It's not just your NOIs that are impacted, but you get your cap rate moves as well. And I think cap rates could start to move sooner than later. And so if you look at stocks all day, the equivalent to NOI and cap rate movement is like lowering your EPS estimates and your PE multiple.
Yes.
It's overall bad for valuations. And so I think what you're going to see initially is kind of a freezing. I don't expect much volume in buildings with rent-regulated units. I think people will try to find where water finds its level. But longer term, if there is a rent freeze, I think the bottom line impacts to NOIs, and there will be a reaction in cap rates, both of which I think are negative.